I know you've thought about it, business owners. Maybe you even tried it. Thinking of writing off that next business trip to Miami or Vegas? Well, not so fast. Let me show you how to deduct travel expenses the right way, what qualifies, what doesn't, how to document it, and best of all, how to avoid waving a red flag that could trigger an audit. According to the IRS, business travel means traveling away from your tax home for a business purpose, and it must be long enough that you need sleep or rest. That could be a client meeting, a conference, site visit, or even training. You can deduct a wide range of travel costs as long as they're ordinary and necessary for your business. That would be things such as airfare, train, bus tickets, hotel fees, even Airbnb, 50% of business meals, taxis, ride shares, rental cars, baggage fees, tips, tolls, parking, even internet or phone charges while traveling. Now, here's what the IRS will not let you deduct: personal expenses mixed into the trip, family member expenses unless they are a real employee doing real work, entertainment, even if it's for a client, lavish or extravagant lodging, the cost of sightseeing or activities on those vacation days. Probably the most important thing of all is how to document it. If you can't prove it, you can't deduct it, period. Here's what your documentation needs to include: dates of travel, destination and purpose, receipts for airfare or transportation, lodging, meals, taxis and ride shares, a daily business activity log, a meeting agenda, or even client emails. Here's a pro tip: use a travel expense tracker or an app that categorizes business versus personal use. Okay, here's the cream. Want to make the most of your travel deduction? Plan it right. Book a conference, training, or a networking event to anchor the trip. Schedule client meetings in the same area. Document it all. If you want to deduct 100% of the travel day, you can do that even if the event is only one day, as long as you're away overnight. Want to make sure you keep weekends deductible? Make sure business occurs on that Friday and that Monday. That's how you anchor your business trip. Who wants to get audited? That's right, nobody. So, travel deductions are a hot audit zone. But here are the things that raise red flags: deducting international travel but having no supporting business purpose, writing off family vacations so you don't have anything documented that you did anything business related, having no receipts or having vague notes you want to be as detailed as possible, having high travel expenses but very low business income, especially repeatedly, having repeated deductions for vacation destinations. You know, those things where everyone wants to go travel to on vacation, and you all of a sudden have business trips there all the time. That could be a red flag. So, how do you stay audit proof? Tie every trip to a business objective. Use clean, organized records. Separate personal and business expenses, even on the same trip. Hire a tax strategist to help you do it right. Business travel can be 100% deductible if you plan it, document it, and keep it clean. Want help with audit proofing your travel log and checklist? Download our free resource below. Be sure to check out our next videos. Visit us at thetaxfreestrategy.com. Like, comment, and subscribe so that you can get more tax-free tips.